It's the metal that built the ancient world and the one that will wire the future. And right now, it's screaming a warning and an opportunity. Copper has just blasted past $10,000 a ton, a price not seen since the inflationary chaos of 2022. But this isn't a simple inflation story. This is a fundamental collision of geology, geopolitics, and a global technological shift so powerful. It's redefining what this red metal is worth. This is the copper shock, and its tremors will be felt in your portfolio, your electric bill, and the very pace of the energy transition. Let's break down what's happening. The immediate trigger for this price explosion is a brutal squeeze on supply. Think of it like this. The world's copper supply chain is incredibly fragile. Most of it comes from a handful of geologically blessed, but politically and environmentally delicate, regions. Take Chile and Peru. Together, they produce over a third of the world's copper, but they're facing a perfect storm of chronic water shortages and social unrest that are crippling their output. Mines can't operate without water, and strikes can halt production for weeks. Then, last year, a political earthquake shut down the Panama mine, one of the world's largest. This wasn't a small hiccup. This single event wiped a staggering 400,000 tons of expected copper from the global market, almost overnight. That's a massive hole to fill. And here's the critical part. This isn't a temporary glitch. We can't just flip a switch and get more copper. New mines are astronomically expensive, costing billions of dollars, and take over a decade, sometimes even 15 years, to get through all the permits and construction. The truth is, the easy copper is gone. We've already mined the most accessible deposits. Now, we have to dig deeper and go to more remote, challenging locations, which costs more time and money. But the supply crunch is only half of the equation. The real story, the engine that's turning this into a potential supercycle, is on the demand side. We are witnessing the birth of two new, incredibly copper-hungry giants. First, let's talk about the AI revolution. It feels like every week we hear about new AI models and tech giants committing hundreds of billions to building out their infrastructure. Well, every one of those announcements is a huge order for copper. Every large language model, every server rack in a data center, is a copper monster. A single data center can use miles upon miles of copper wiring for power delivery and for cooling systems. The sheer amount of electricity needed to train and run these AI models is mind-boggling, and all that power has to travel through copper. Analysts are literally scrambling to upgrade their copper demand forecasts. As they try to keep up with the explosive growth of AI, it is a new source of demand that barely existed on this scale just a few years ago. Second, and even larger, is the green transition. We all hear about the global push towards clean energy and electric vehicles. What often gets left out of the conversation is what all of this new technology is made of. An electric vehicle, for example, uses nearly 4 times the copper of a conventional gasoline-powered car. That's because of the battery, the electric motor, and all the extra wiring. Now multiply that by the millions of EVs that are projected to be sold in the coming years. It's the same story for renewable energy. A single megawatt of offshore wind power that's just one source needs over 8 tons of copper. Solar farms require vast amounts of copper cabling to collect and transmit energy. Governments around the world have committed to building this new electrified world, but it seems they forgot to check the copper inventory first. The International Energy Agency, a very sober and respected organization, estimates that demand for copper just from clean energy technologies is set to triple by the year 2030. Think about that, a tripling of demand from just one sector, on top of all the traditional uses and the new AI boom. We are essentially trying to build a futuristic electric society with a supply chain that's stuck in the past. This massive imbalance between shrinking supply and exploding demand is doing something fascinating. It is turning obscure patches of Earth into strategic global battlegrounds. A place you've probably never heard of, like the Reko Diq mine in Baluchistan, Pakistan, is a perfect example. This is a $500 billion copper and gold deposit. It's no longer just a local mining project. It's now a focal point of the intense competition between the United States and China. For China, which consumes a staggering 55% of the world's refined copper, securing a steady supply isn't just about economic growth, it's a matter of industrial survival. Their entire manufacturing and construction base depends on it. For the West, including the US and Europe, it's about energy security and national security. If you can't get the copper, you can't build the wind turbines, the solar panels, the EVs, or the advanced microchips you need to compete. You become dependent on your rivals. This is why Chile is rethinking its entire national mining model, and why companies are so desperately looking at new, controversial frontiers like deep-sea mining. Copper is no longer just another commodity traded on the market. It has become a strategic asset as critical as oil or silicon chips. So, after all that, what does this copper shock actually mean for you? First, for investors, this is a major signal. There's a reason they call it Dr. Copper. The metal is famous for having a PhD in economics because its price has historically been a great predictor of global economic health. But the diagnosis is changing. The doctor is now telling us we are in a world of structurally constrained supply and runaway, non-negotiable demand. This isn't just a short-term cycle. This fundamental shift moves copper from being a simple cyclical trade to a potential long-term structural investment. People are looking at copper as the new oil, the essential fuel for the next wave of technological and industrial progress. Second, and this is for everyone else, whether you invest or not, higher copper prices will eventually flow through to the cost of almost everything. It's a basic building block of the modern world. Think about new homes and the wiring that goes into them, or the cost of a new car, especially an electric one. It will impact the cost of building out the renewable energy projects that are supposed to lower our electric bills. It could even show up in the subscription fees for your AI tools, as the cost of building the data centers that run them goes up. Copper is a direct, tangible input cost for the next decade of global growth. We will all feel its price, one way or another. So, as we wrap up, it's clear the copper price isn't just a number on a trading screen. It's a real-time stress test for the global economy's most ambitious plans. It forces us to ask a very serious question. Can we actually build this electrified, AI-driven future we've been promised? The current price spike is the market's loud and clear answer. Not without a lot more metal. Not without navigating immense geopolitical friction. And certainly not at the breakneck speed we all hoped for. The great global race is now on. A race to find, to extract, and to refine the copper of tomorrow. The countries and companies that win this race will be the ones who control the wires of the 21st century. It's a story that's just getting started, and it will shape the world for decades to come. Thanks so much for watching. If you found this breakdown insightful, be sure to like this video and subscribe to the channel for more analysis on the forces shaping our world. See you next time.